Okay, so for credit, I'm going to run through this real quick because it's mind numbing. I know, I apologize. But I want to, so how you hit them, credit cards, if it's on the credit report, use a monthly minimum payment. I don't care if the balance is 10 grand. If it says with monthly minimum payments, $30. That's where we're qualifying them. Student loans, if they're in deferment, FHA requires we do 0.5%. Fannie Freddie requires 1% of the balance. VA is the only one that allows you to not hit them for a student loan payment to qualify them if the deferment, or excuse me, the note rate on the new home is outside of 12 months from when you close. So that's a big one with VA. IRS payment plan, FHA, you get on the payment plan, you can't close until you make at least 3 payments to the IRS. That's a big one. They follow Fannie Mae. So as long as that payment plan is in place, you don't have to make payments, but you do have to qualify with what's on the payment plan. You can omit when 10 months or less are left on any installment loans, including automobiles, co-sign installments. Like if I co-sign for my brother and being the bummy brother that he is, I gotta pay for it. If you can prove that he's made that payment consecutively, then you can omit it, just like FHA and Fannie. Collections, we use 5% of the balance. Medical collections, nobody hits for those. Charge-offs, we don't hit. Derogatory accounts, so if you got a client with a lot of collections, a lot of charge-offs, you got to whip up a letter in the beginning and make it make sense to the underwriter. So liens, lenders run a lot of fraud guard reports. I don't even have access to it. I got to request it. But if it's not on the credit, if it's not on the pay stub, if it's not anywhere you can find it that he's making a payment, him or her, they're going to run a fraud guard. And if a lien comes up that's truly theirs, you got to show that's either released, let's say it's with the county, or we got to pay it through closing to make sure it gets satisfied. Pretty black and white on that one. Credit events are the most lenient. 2 years, short sale, foreclosure, bankruptcy, you name it, 2 years and you're out. Non-borrowing spouse. In California, it's a community property state. So if I'm buying the home, I'm the veteran, my wife's not going to be on the title or the loan, I still have to qualify with her debts.
Hello,